We're excited to announce we've got Jim Campbell Radio now on YouTube. It's got all of our business talk with Jim Campbell, our forensic talk with Jim Campbell, all in one site. All you have to do is search Jim Campbell Radio, and then please subscribe so you'll be in touch with every new show. Roddy Boyd is the founder of the Foundation for Financial Journalism, a nonprofit with the goal of providing in-depth financial investigative reporting for the common good. He's the author of Fatal Risk, a cautionary tale of AIG's corporate suicide. We guest on our show for that. And that book was longlisted for the 2011 Financial Times Goldman Sachs Business Book of the Year. And the Huffington Post has named Roddy Boyd one of the 25 most feared financial reporters in America. He's a feared guy. He was last on our show with Bethany McLean on the Valiant drug pricing scandals, recent investigative reports, Q31LP, the Cryptic Doctors of Persuasion, and the Brotherhood of Thieves, Insys Therapeutics. Welcome back for the third time. Roddy, you have good names for your investigative reports, I'll tell you that.
Thanks. I appreciate that. That's the legacy of working at the New York Post for a while. The business desk. Yeah.
You've recently changed your name, as I just mentioned. Do you want to go through exactly the rationale and what you're doing?
Sure. Yeah, we changed it from the Southern Investigative Reporting Foundation to the Foundation for Financial Journalism for a pretty basic reason. We wanted to just align the name with the editorial product to make things clear to readers, donors, subjects, so there wasn't any kind of confusion. And I think it works. I think it looks better, seems better. So onwards, upwards, as I say.
Yeah, no, I think it's sort of a cooler name, has a broader range than Southern,
Yeah.
Now, this first one, the cryptocurrency hedge fund Q31LP, it kind of looks like the makings of a Ponzi scheme. And, of course, I'm very interested in that with the Madoff book coming out. It's an affinity crime. Also, obviously, Madoff's was an affinity crime to a big extent with the Jewish community. Give us the overview of this, then we'll dive in.
You hit it right there, and I think obviously with your Madoff book in the works, I mean you're definitely, your radar is tuned in on it. I mean it's just a classic Ponzi scheme, and to the Madoff point, it wasn't as elegant as Madoff. It was a hedge fund of sorts. I guess it originally had been set up in 2017 with three partners with, like many such Ponzi's, again, I need not tell you of all people, that my reporting suggests that it at least had somewhat serious, aspirations. They were going to trade the new cryptocurrencies. They thought that they had an algorithm. I should mention, by the way, that there are three partners. One was a St. Petersburg area physician, Dr. Quan Tran. Again, a respected, serious physician with, all board certifications and licenses in place and in good standing. And then the other two partners were two ex-New York Stock Exchange floor brokers. One was a specialist, used to make markets and stocks, a guy named Jamie Sejas. Lived in northern Jersey, and then there was a floor broker named Michael W. Ackerman. Mike Ackerman had, I think, moved to Cleveland, or actually, outside of the Cleveland area, where he's from, and he had purported to have a computer trading program that could harness the volatility of cryptocurrencies, which, I'm not even sure volatility is the appropriate word if you just even look at that asset class. And, it was supposedly going to be, intuitively hedged. It would naturally offset the risk and kind of create a more stable, rational earnings stream. And without going too much into what you can expect from a professional money management operation, it really didn't work. I think within the first month or two, they had lost their small grub stake, and Ackerman said, "Oh, don't worry, guys, don't pull out of our sort of nascent partnership. I'll retool this thing." And within the month, he had retooled it, and they were up 15%. Again, that's a nice, very nice performance for a calendar year for a professional money manager across any asset class. And he said, "Look, I think we can do this every month." And lo and behold, they did.
You know what's interesting? First of all, I counted 6 things that were exactly out of the Madoff playbook. But this affinity group, doctors, obviously shows their lack of understanding of finances, because he was claiming 13 to 15% a month, okay, guaranteed basically, which of course is ridiculous. But at the same time, 70% would be in cash, and of course, cash is earning zero. So the math, it was just completely ridiculous.
It was, I think what drew me more, obviously, the 180% a year return. That's what you get, 15% over 12 months. That's just, it's comedy writers couldn't frame that up, right? But putting that aside, the 70% in cash, I really hurts, because like you said, the limited partner base, the investors of this fund were all doctors, all of whom, not all doctors, mostly doctors, and most of whom had, tremendous amount of science education, including, science like physics and stuff like that, where, that's heavily math intensive, where even if you're not mathematically confident, it just doesn't add up. My reporting hasn't turned up any instances where people, investors in the fund, were, questioning this. Like, there wasn't any I thought this was off or didn't make sense to me. Nothing. Like, there were no guardrails. There were just no caution, no yellow cards, whatever metaphor you want to put in. There just wasn't really speaks to. And again, I'm, as you know, a reporter. I am just baffled at the consistent, in my career, whenever I see large amounts of doctors and dentists piling into a stock, like in a pre-IPO situation, you really know that they're not in there for investment purposes. It's like a tribal affinity thing. You're absolutely right. Yeah.
They were it was a Facebook group called Physicians Dad's Group, and we should mention he raised $33 million, right?
He raised $33 million in 6 weeks.
Jeez.
And again, your audience is probably heavily business centric, and I know you've been doing this for as long as anybody, quite frankly. And so, raising money, not the easiest part of any business. Forget about hedge funds. If you're just, trying to raise money to buy a deli or something like that, and it's never easy. It's not supposed to be easy, quite frankly. And he did this as a part-time. Again, this guy's a surgeon. He's a board-certified surgeon. The guy who did all the fundraising was Dr. Tran. And this guy has a day job. You know what I'm saying? And he has a day job that, it's a real job. And it takes time. And so he's doing this, texting guys at lunch. He's doing this, making calls on the week, sending out a couple of emails. Again, from just a lot of experience, and I'm sure your audience knows as well, raising money for a hedge fund, particularly a sort of a new asset class that, I've tried to really understand cryptocurrencies, Jim, and all I can say is I've got about 2 sentences, 3 sentences worth of description in me, and then I'm lying to you. I'm just toughing it, and he's doing that. So, God, if he had really set his mind to this, I fear for what he would have done.
Yeah, he wasn't he wasn't too subtle in making it a crime, basically, right off the bat. Two questions there. Dr. Tran was con too, right? He had no involvement in it. And two, this guy
Go
ahead.
Exactly. He and the other guy, Jamie Sahas, were notwithstanding that they should have seen and said something and known a lot better, particularly Jamie Sahas, who at least worked in, the financial community. There's no suggestion at this point.
All right, we'll be right back for segment 2. Don't go away.
Would you like to host your own radio program or podcast? Park City Productions 06604 is a Bridgeport, Connecticut-based radio broadcast solutions company. Follow us on Instagram, like us on Facebook, and subscribe to our YouTube channel. That's Park City Productions 06604. Call us at 203-522-8801.
We're back with Roddy Boyd. He's a financial investigative journalist. Q3-1LP, the Cryptic Doctors of Persuasion, and we were just talking about the doctors when we left. And I was going to ask about Ackerman. The guy was a floor broker. I don't know if he worked for UBS or the other guy, but he seemed to have a reputable background to be doing something. He couldn't believe that he was being clean, could he have?
No. I mean, this was root and branch a fraud. I mean, again, speaking to your, some of the things you picked off. I mean, one of the big ones has to be that, he controlled all of the access to the trading accounts. There was no prime broker. There was no custodian.
All of which is Madoff. Madoff did every one of the exact same things, including the black box algorithm, and the fake screenshots, which you can talk about. I mean, it's just amazing.
There's not a suggestion. I mean, maybe at some point he hasn't made any of his defense filings yet. He's due in court, I believe, at the end of this week, coming up to enter a formal plea in the Southern District of New York. So we'll see where he's at along those lines. But they were doing the updates to investors based off of screenshots that I mean, basically he used the Microsoft Excel program and just inputted numbers and as they say, garbage in, garbage out.
It's exactly like Madoff. Madoff went to the extent of, the Depository Trust Corporation holds securities to prove that there's trading. He invented, first of all, they invented screenshots of it so that it looked like it was real, and then they had a guy in a closet so they even looked like it was a live feed to the DTC.
God, yeah. Well, I mean, again, Bernie is the gold standard. Ackerman, look, but I mean, another couple of months of fundraising. I mean, if you can do $33 million in 6 weeks, Jim, I really feel you can do a lot more than that, if you put your mind to it.
Tell us, where's the $33 million now? What happened to it?
That's a great question. My fear is much of that has to be gone. Mm-hmm. And what there is recovered is, fortunately, Ackerman took a lot of his cut of it and plowed it into buying various properties here and there. Obviously, as you and the audience would know, the good thing about laundering the proceeds like that is, hey, look, you can sell. And they will hold some value. He bought a beachfront house in Delray Beach, for example. That'll hold its value. And you might not get what you paid for it, but you'll get something.
Yeah.
But when the feds swooped in, they only had $10 million in the accounts, and maybe another $8 to $10 million in Ackerman's dirty real estate type deals. I'm not even confident that there's that much, quite frankly. 8 million. I mean, my back of the envelope here, Jim, is you might be looking at a 50% loss, and more. Like, I mean, it could be, net recoverables and all of that might be 14 million, 13, 15. I don't know.
And he paid himself $7.5 million for the license for his black box algorithm. Yeah,
I mean, there was some stuff there off the top of it, again, that you should it's not even a red flag. It's a red flag factory. This one was, all three partners cut themselves a little dirty dealing there. They charged limited partners $4 million off the top in fees for use of this, miracle algorithm, 15%, sort of spreading 15% returns like it's fairy pixie dust or something like that. And then on top of that, Ackerman took at least $7.5 million for himself. He swore he wasn't taking any money, that they would only get their management fees at the end of a year. And obviously, among other things, that was a lie. And then there were distributions to the other two general partners. So, I mean, it's Ackerman took at least $11.5 million, and almost certainly more.
Jeez.
Yeah.
So getting back then to that is, I don't know if he was I think he was at UBS as well as being a floor broker on the exchange. Did he have any record of this kind of sleaze?
No, he had. I spoke to a couple of people who had worked with him or knew him. Again, this is the older New York Stock Exchange. It's kind of hard to know guys, too well, in that culture. Again, I'm sure you're aware of what I'm talking about. I mean, he had a decent reputation and certainly never struck anybody as some sort of criminal mastermind. I have to say, for the record, that job is entirely different than algorithmic design and, design and kind of trading. So he didn't really have a whole lot of background in that. He'd worked at a shop that did some of it for less than a year. Again, it's not clear how or why he left it, but I mean, I think I noted in the story his record was clean with FINRA, the sort of the omnibus, self-regulatory organization of the financial community.
Isn't cryptocurrency itself kind of a con game, really? I mean, there's really nothing backing it. It's used for a lot of nefarious purposes, and it's up and down like crazy.
Yeah, I mean, I, along with many others, are deeply skeptical of cryptocurrency. I can't say that it's definitionally a scam, because I just can't. But I have to say that, boy, there is no vocabulary I possess. Maybe, you know more than me, but it's just everything about the entire construction of it screams caution. Like, hang on, let's all sit back and wait for this thing to play out. There's nothing backing it. It's not, there's no formal entity behind it that mandates its use for payment. There's too many of them. There's just not nearly enough regulation. They're mind-roastingly complex. Even the ones like Bitcoin and to an extent Ethereum, which are designed to be not problematic like the others, are still quite concerning. Yeah, and the volatility, Jim, I mean, words alone don't describe how volatile these things are.
We're excited to announce that Jim Campbell Radio has now been unveiled on YouTube. You search Jim Campbell Radio. When you get there, please subscribe. You'll get all our updates. content is regularly updated, and Forensic Talk with Jim Campbell and Business Talk with Jim Campbell, all of our podcasts are right there for you. All of this new consolidated data content updated regularly. Jim Campbell Radio.
Are you from California, Illinois, New York, Georgia, or any of the other 39 states that charge state income tax? Does your state claim you owe them any amount of back taxes? Or have you not filed in years? Is your heart pounding because you know they're wrong or you just don't have the money? Don't fight the state income tax board alone. The Tax Doctor is here to help you. The state is much more aggressive than the IRS in collecting taxes. They have the power to take your home, your car, your driver's and business licenses, even garnish your wages, freeze your bank accounts, and go after your spouse. Solve all your income tax problems permanently and keep more of your hard-earned money. Make this 100% guaranteed risk-free call right now.
800-985-1610. 800-985-1610. 800-985-1610. That's 800-985-1610.
We're talking with financial investigative journalist Roddy Boyd. We're talking about kind of a Ponzi scheme first, Q31LP. On Tran, did he reveal or disclose to basically his own affinity group that he put together that he was taking this kind of fees out of it?
No.
Yeah, see, that's not very good, is it?
No. And that's, I do anticipate down the line there will be some, at least serious consideration of litigation. Civil litigation, from some of these people against him because, I mean, at least the $4 million, license usage fee is, that was had bad form.
And you got to disclose. You got to disclose that, right? Particularly if it's your friend, if it's your friends, Yeah,
I mean, and I would be surprised that. Even if he had disclosed it, I do anticipate. I mean, again, I have to make clear, and I hope I did in the article that at this point, no one's thinking he had anything to do with it. The actual mechanics of it. He is a victim.
Yes,
but he owed the people that he attracted as fellow limited partners at least the duty. He didn't tell them for a few weeks that he'd reported this to the SEC, and he didn't tell them about the $4 million fee. And, even if he's not the most financially sophisticated fella, that you're going to run into in the wild, I do think at some level he had an obligation to sit back and say, how are we doing this?
Yeah.
How is this guy the smartest human being, in Western Hemisphere? I mean, it's astounding.
Now, right now, the status is Ackerman claimed illness, sent him back to New York, and that he had to stop trading. What's going on right now?
The fund is defunct. At least right now, we only know of about $10 million. And Ackerman, he voluntarily surrendered to and was processed in the Cleveland U.S. District Court. But within the next week or two, will be showing up in Southern District of New York to formally enter a plea with counsel. And at least at that point, we'll know where things stand. As of 2 days ago, I was traveling yesterday, but there's no filings up on Pacer, the public, federal filings database. So I'm just going to cuff this, Jim. So if I'm wrong, I'll own it in advance. But my guess is he's working with his lawyers to look at a plea. Because, I think they've got him dead to rights.
Yeah.
And, he's looking at 20 calendar years if he goes to court and loses.
Yeah.
Which, again, fully his constitutional right. But the government, as you know, is really clear about the consequences for not taking plea deals, rightly or wrongly. And nobody's more clear about it than federal prosecutors, in my experience. And he has a great deal of incentive to try and, negotiate a plea, return, make what restitution he can. And I was talking to a former federal prosecutor on this, and he was telling me that the bonus for cooperation here for Ackerman could be considerable. I mean, he could shave as much as, let's say, 7 to 8 years off a sentence. He's still looking at 12 years federal time, which takes you out of the so-called club fed, the prison camp corridor, and puts you in the actual prisons, medium security and above. So it's not going to be easy time, but he'll get out at a point. He doesn't necessarily run the risk of dying in prison. So, I mean, that's the baseline we're looking at. Maybe 10 million max, 10 million cash plus whatever the properties can get liquidated for. And again, they're going to be liquidating them in a hurry. Your market understands what happened. Your audience understands what happens when you have to sell in a hurry. You don't get the best price. But I mean, he's in a lot of trouble.
Have you
find anybody that?
Did you get a chance to speak to Ackerman at all?
One of the hallmarks of my report, I kill myself to try and not sandbag people. I really try and give people the opportunity to comment. And I actually tracked down, I thought it was Ackerman's wife. She was in the databases alongside his name. And I reached her, and she was, friendly enough, but she made clear that she hadn't spoken to him in years, that it was his, her ex-husband. And she said something funny. I have no contact with him whatsoever. I was like, look, I said, I'm not trying to be rude. I certainly not trying to insert myself into your personal life, but he is an ex-husband. You must have an idea. You've had kids with him, blah, blah, blah. She said no.
All right, we're gonna switch streams here, and the Brotherhood of Thieves Insys Therapeutics was an investigative report he did. It's going to be the subject of a PBS Frontline. I guess the air date right now is April 21st. You told me. Tell me let's talk about Insys Therapeutics. Do the overview of this scandal.
Sure. High flying stock, IPO of the year on CNBC in 2013, at one point was worth north of $2.5 billion and heading well north. It was what they call a specialty pharmaceutical company. In other words, it really only had one drug, which, again, fine, not a problem in and of itself. Its one drug, though, was one hell of a drug. It was an oral formulation of fentanyl, which is a opioid that's about a synthetic morphine type opioid. It's about 100 times stronger than morphine, though.
Wow.
And I mean, it is a 100 times stronger than morphine. And got a tip that this company I should say one other thing by way of explanation. It has one approval for use in America it's essentially for palliative care. Late stage cancer, hospice care. So again, and it's valid for that. Okay, for people who can't swallow or who are losing quite basic metabolic abilities. You take it like an inhaler, just like it's an asthma drug. Looks identical, quite frankly, to an asthma inhaler. And it hits in about 2 seconds, and again, valid for its approval. But this company had a unique twist to its business plan, Jim. They said we want skyrocketing sales. We want, rivers of cash flow and all of that. They set about getting sales by bribing doctors.
Yeah.
And they would bribe doctors with money, or they hired, in most of their sales force, certainly 60%, maybe more, were, very attractive women who were young. Most of them had no scientific or pharma industry training. And they encouraged these women to do anything to close a sale. There's a boiler room culture, absolutely a boiler room culture, no different than Stratton Oakmont culture. So you had a lot of these beautiful young sales reps going out, getting drunk with doctors and sleeping with them for prescriptions. And I got onto the story in late 2014, spent a year plus writing about it. And, I'd like to say, again, I know you speak to fellow board members of the FFJ, Bill Cohen and Bethany fairly regularly. Boy, I really thought that we would have big, results with this right away. And it turned out that, I didn't. The sales continued to climb. I got teasing, mocking notes from investors and analysts and company insiders. And everybody's selling stock and they have options and everybody's in the money, literally and figuratively. And then one day the subpoenas start coming.
All right. We're talking with financial investigative journalist Roddy Boyd, Murder Incorporated, and we will be right back for our final segment. We're talking with financial investigative journalist Roddy Boyd. We're talking about kind of a Ponzi scheme first, Q31LP.
One day in mid-2015, the company puts out release, sort of buried what they call an 8K, not really a high-profile public filing, but they acknowledge they're getting Department of Justice subpoenas, Security and Exchange Commission subpoenas, even perhaps more troubling for them, Health and Human Services Office of Inspector General subpoenas,
wow.
FDA. I mean, insert a alphabetic acronym, and everybody but the CIA is looking at these guys, and maybe them too, and but the sales still kept on going for a year or two, right? Because they had that wacky, I shouldn't say wacky, it was quite a felonious business model. And I one of the things in my stories that you and the readers would, obviously pick up on is I was really trying to scrub the FDA data, what they call adverse event data on this. And, one thing I saw on it, and it stunned me, was the amount of fatalities that were reported, from day one of its, of this drug being commercially legal. People were dying. I mean, because a doctor described this to me as, it's the emergency brake on a New York City subway car. I mean, and for all the crummy stuff that happens in subway cars, boy, people don't really pull the brakes. And it's like doing that to your cardiovascular system. And it really can be dangerous. I mean, not only for heart attacks and overdoses, but the obvious, risk here is addiction, which,
yes.
And all of the horrors that brings. And so I was reporting on this, and I started to get families of people reporting to SIRF, our Southern Investigative Reporting Foundation's email account, just saying, not a Wall Street person, not a journalist person, just my son is addicted to this. Is there anything you can,
Yeah, sad.
it was just heartrending.
It's called
But,
Subsys, by the way, the drug itself?
Yeah, the drug itself was Subsys, Subsys. And as we noted, fast forward a couple of years, about 13 company insiders get indicted federally, and including their entire C-suite, except for the CFO. I'm not joking. The feds just simply went after the entire C-suite, and the SEC, went after everybody else. They approached this. I got to talk to the FBI guys and the prosecutors involved in this because they put them all on trial in Boston. It was a mass trial. They had 5 people in the dock at once. I'm not joking.
Wow.
And they made an org chart, just like business school, Jim. There's a CEO, there's a chief. They went after all these guys. Man, did they, they prosecuted them under RICO, too, the Racketeering, an Organized Crime and Corrupt Organization Act. They got, lots of pleas, and then they got 5 convictions.
Is Subsys off the market? Is Subsys off the market, or is it still available?
It is effectively off the market. Insys declared bankruptcy late last year, and is being liquidated. The only asset it has left is, before it declared bankruptcy, the Department of Justice secured a $190 million penalty in cash, and there's so many suits outstanding you can't even track them. Quite frankly, I can't.
Is the stock price at zero or what?
Oh yeah. I think it's trading in the pink sheets it's certainly under 30 cents.
Wow.
The one asset remaining is the Subsys license, the patent, but that hasn't been awarded to anybody yet because of it. The government is supervising the process, so they're only going to award it to a company that will allow direct monitoring of its sales process for use in palliative care.
Only, yeah.
So my guess, and I'm just cuffing this, I'm not sure. I think the patent might actually just might expire, and no one, it's not allowed to be picked up. Or if it is picked up, it'll be a new patent subject to a new set of rules.
It does,
obviously, quite frankly,
it does look
the
like
FDA didn't, keep close enough tabs on it.
A fentanyl product that is 100 times morphine. That's just like, addiction is just automatically with this. Kind of cynically, you said their business plan was kind of, they knew this. They knew what they were doing, and just push it, then pay fines. But
reading between the lines, that's exactly what they thought. Because look, they're looking at their bigger pharma brethren. Okay, they're looking at. Just north of Stanford, right on I-95, is the Purdue Pharma building.
Yep.
And they looked at what those guys did, and, the fine they paid in 2007, a $600 million fine, a couple of guilt. They looked at, Merck and all the big boys. I don't have to tell you. You know all the names. And, they knew the game. They just said, look, this is a line item expense. Look.
Pretty cynical.
This is the industry. This is how you do things.
Well, it's always a quick hour and a fun hour. And also, you say in your nonprofit that it's for the common good. This is actually taking on, literally taking on murder. And in the first case, taking doctors getting ripped off by millions of bucks. It's Insys Therapeutics, the PBS Frontline documentary on that is April 21st as of now. And Q31LP, the Cryptic Doctors of Persuasion. Tell everybody what your website address is. Sure.
Yeah, it's an easy one. It's FFJ Frank John -online.org. FFJ.online.org. And we are donor supported, indeed.
How can they donate? Is there a click?
Sure. There's there's a PayPal tab right there. Everything's tax deductible, by the way. So there's a PayPal tab right there. And then there's another link to if you want to send check or wires or, something like that.
All right. Thanks again to Roddy Boyd. We always love having him on. This is everybody on the next edition. Thanks a lot, Roddy.